What the heck is an escrow account? We're going to talk about that, interest rates, and more in this episode of the Mortgage Minute. Hey there, my name is Ryan Skaggs. Thank you so much for tuning in to the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates. We're going to dive into those interest rates first and foremost. So, this is actually the first week that we've seen rates go down over the last 8 weeks. We had 7 straight, and I'll tag the video there above. But we had 7 straight weeks of interest rates rising. Finally, to have 1 week, and really, to be honest, we just stabilized. According to Freddie Mac, the average 30-year fix is at 5.10, and that would be paying points. Last week, it was 5.11. So just skinny little decrease in interest rates. You can check out the link below to Freddie Mac. They put out a weekly survey that kind of shows you a historical average on where interest rates have been, where interest rates are going. So while you're down there checking out that link, hit that like button, hit that subscribe, click that bell icon to be notified as I'm putting out weekly videos on the channel. I would be forever grateful for the subscribe. So let's talk about the escrow account. And I'm going to actually take you onto my screen here so we can talk a little bit more about a real life example. So in this case, we're wrapping up April, going into May of 2022. First tip for escrow is understanding your key due dates. I'm going to use Cook County in Chicago, Illinois. Typically, our due dates are March 1st and then again in September. So if you see in red, I put there is that this is what actually accumulated. This is the taxes that accrued that are then payable. So for the first 6 months of 21, those are due March 1st of this year in 22. So as we say, we pay taxes in arrears, meaning they're paid after. So in September, we're going to owe the second part of 21. So that's really important to know first. So if we assume that we have a close date in June, remember, if you're purchasing a home, you do not have a payment the very first of the next month. So if you're purchasing a home and you close in June, you do not have a July 1st payment. The interest that accrued for the month of June or July is basically taken into consideration as part of your closing. Your first payment is August 1st. Now, if your first payment is August 1 and they're due in September, that means you only collected one payment, but you have 6 months of property taxes due, right? So if you have 6 months of property taxes, you need to get at least another 5 into your escrow account just to have at least $1 more than what you need. So what lenders are going to do, they're going to collect a 2-month cushion. So what they're going to do in this case is that you have one payment made. You're going to be paying that property tax from your escrow account. So essentially what happens is the lender is going to collect 5 months plus a 2-month cushion. So 7 total months. If we said property taxes are $1,000 per month, that is $7,000 that we're collecting at closing. Now, you might stop and you might think about it, Ryan, that seems unfair. Like, I put $7,000 up for taxes that accrued last year when I didn't even own the home. You are correct. Absolutely. And that's where a seller tax proration credit comes in. In this scenario, this buyer would be getting 12 full months of a seller tax proration. And here's how the math works. From 7/1 of 21 to 12/31 of 21, or 6 months, right? That second 6 months of 21, that is payable on September 1st. So if you close on June 30th, the seller can't even pay the bill. The bill's not out yet. So in that case, they're getting 6 months of a credit. And then the start of this year, the start of 22, 1/1 all the way to 6/30, that's another 6 months. So in this scenario, the buyer will be getting a credit of $12,000 as a seller tax proration credit, not a seller credit, but an actual credit to go towards the escrow and to offset that. Now, what is escrow? It's just basically a savings account set aside with the lender to pay those property taxes, to pay the insurance, things like that, right? If you're in a flood zone, maybe flood insurance as well. But hopefully that math will help you kind of understand how that escrow account works. It's all based on the due date. So that's tip number 1. And tip number 2 is always assume that you're going to be short. At the end of the year, the lender will reevaluate your escrow account. They'll do what they typically call an escrow analysis, and they'll look at it and say, do we have enough money in the escrow account with a 2-month cushion to be able to pay those bills the next year? And as you probably know, no matter where you're at when you're watching this video, is property taxes are typically going up. Occasionally they go down, but that's my second tip. Assume that they're going to kind of go up and you're not going to have enough. And what they're going to do is they're going to redo the math and say, we need X amount of dollars. You're short by this much, pay this in. And then they'll increase your payment slightly depending on what that increase was. So that's called an escrow analysis. If for some reason your taxes went down, lo and behold, that would be great news, right? You can always call your lender and say, hey, do an escrow analysis right now. The new tax bill just came out. And by the way, my taxes are less. I don't want to be paying in this higher amount. So another tip for you when it comes to escrow. Thanks so much for tuning in the channel. Put your comments below. Let me know anything, everything around escrow. I would love to see your comments below. So thanks so much for tuning in the channel and the video. Check out the others. Click that subscribe button, and we'll see each other again very, very soon.